The bull trap is set. Bitcoin's up over $4,000 in the last 24 hours. That's 4.3%. However, it's still short of flipping the trends in a decisive way. We've had the CPI announcements overnight, bringing in volatility to the stock markets. Heaps to get through in today's video with you. Don't go anywhere. You're at your home of macro cycle analysis with me, Jason Pizzino. So hit the like button, subscribe to the channel. We're doing amazingly well. 4,300 likes on some of the previous videos. So thanks very much, guys. And the links in the video description for our channel sponsors. We have a $100,000 giveaway with Bluffin and their trading competitions right now. So use the official links. Let's get started. Okay, Bitcoin, as I said, has jumped. And the thing I noticed over the last 24 hours as I've been scrolling through X and YouTube is the amount of accounts that have suggested that the low is in. And it potentially is, because the 3rd of February has not been broken, nor has the 13th of January. Both those lows are still in. And the 12th of February now, so basically an exact 1 month repeat on, you'll love this too, on the full moon yesterday, we've seen the price jump. However, as we talked about in yesterday's video, the target that I'm looking for is a close and consolidation above $103,000 for BTC. So we're yet to see that. And as we talked about in yesterday's video, should we get any sort of rise here, a breaking of 50%, the 50% level at 99K, the psychological level at 100K, maybe even getting close to 101 or 102, you know, like every single $1,000 on the way up, unless, at least in my opinion and my analysis, that's why you're here on the channel, unless it gets above, for a round number, 103, which was the previous top of that massive bounce, and consolidate above this level, I think it's all part of a bull trap. If that term is new to you, just a quick look at what Google AI tells us. Bull trap is a trading term to describe the situation where asset price rises but then falls. Awesome. This can lead to investors making losses. A lot of things can lead to investors making losses, as we've found out over the course of many years. The main thing here is that it's the excitement of the possibility of a low. You know, people are getting a little bit strung out and worn out with this grind that's been going on for 3 months, just hoping for anything and praying that the next move is going to be that move that sends the market higher, right? But then the same thing happens. We head up, we put in generally a lower top or a weak top, like we saw at the all-time high on the 20th. It did not close above the 108, so that's a very weak top, very low close. You can see right there on the bar. And then the market falls down. So here, maybe it does a similar sort of thing. It could get to 105, 106. The important part is where the close comes in and the volume. And that's what goes on to say here. You know, a false sense of security, emotions, greed or fear can influence that. That's what we're going to get to in today's video. And a lack of accurate information. Investors may not have the full picture. I think that usually happens. How to spot a bull trap. Low trading volume. I suspect that's what we're seeing at the moment. Looking for a divergence between the stock price and indicators. Obviously, we're using Bitcoin here. Monitor the price after the initial upward movement. So that's only part of the story. We got heaps to have a look at, especially as we've seen this happen in the previous move. Now, I've also got one particular chart that shows it's got 100% accuracy so far, only because the data is relatively fresh. With Bitcoin futures, it's only been around since sort of 2018, very late 2017. But more importantly, the COT data as well, which we'll have a look at. And that has had a very solid success rate of picking when the market is going to bottom and then turn and give you an explosive move, or a better way to look at it is the confirmed move, the decisive move, not the sort of in-between noise that we hear of, you know, the market range trading between $90,000 and $108,000 and everyone getting hyped up and then sad and then hyped and then sad. You know, it's the same thing over and over again with the emotions. And a very interesting point that I'll get to with the COT data is that it almost replicates exactly the overbalance in time and price. If you're new to the channel, you must know about overbalance in time and price. We've got a solid masterclass on this with TIA Premium. You can find a link to this in the video description. There is a 7-day free trial. Check it out for yourself. An active community of traders and investors, short-term, long-term, and heaps of trading content to get through that'll keep you busy for quite some time, but you'll learn a hell of a lot there. Okay, so that's BTC, and I'll get to this overbalance in time and price, but economic data that we've seen over the last 24 hours. The core PPI, CPI, we have the PPI coming up. President Trump speaking. When doesn't he speak? I love it. And the CPI month over month, core CPI as well, CPI year over year was slightly higher. And this has been something that I've been talking about on the channel now for quite some time, but you might recall it. We're talking about inflation picking up again towards the end of the 18-year cycle, at least the peak of the cycle, and then that leads into the fall. Let's go that way because my camera's reversed. I think that's what's going on. Okay, so we'll get to that in just a moment. The next piece is just looking at the sentiment for the stock markets. Fear and greed index is at fear. Neutral was yesterday, a week ago was fear. The crazy thing about this is that the market is in fear, yet it's very close to a new all-time high. So it seems like it's shrugged off the inflation data from yesterday, the inflation picking up, as we just saw there. The forecast was for it to stay the same at 2.9% and went up slightly to 3%. So what I believe is going on, if we look at this from a bigger picture, to try and put this into perspective, say with the short term on Bitcoin and then the long term, right, is that the stock market, the traditional markets are shrugging off all of the bad news or the perceived bad news. Could you imagine what this would have done to the markets a couple of years ago if the inflation kept picking up? It was in a bear market, right, in 2022, so it would have been more scary to the market, and that would have either held the price down or continued to push it lower. Whereas now, you're seeing the market push down and then push back up a little bit. It didn't even break the low of Monday's bar, when there were some fears of more tariffs or Trump playing games with tariffs. Then the Monday before that, there was Trump playing games with tariffs again. The Monday before that, was it tariffs? It's usually tariffs every week. And then the Monday before that, I think it was DeepSeek, somewhere in there around the inauguration period, maybe slightly after it. Either way, the point of this is the stock markets, the biggest in the world, the US, continues to shrug off what was perceived as bad news, which may now be turned into good news, which means, well, from what my point of view is, it's a wall of worry. So you're in a bull market. When you're in a wall of worry, you're in a bull market. We've continued to see prices go higher. We've got increased volume compared to those last 2 days. So pretty decent volume there. Slightly lower close. I would have rather seen a higher close here for more of a confirmed move to the upside, so something above 6,100 points on the futures contract. But nonetheless, that's really getting too granular here. We've held above the 50%, so even if we do see further downside, I would suspect it's going to come out somewhere around 56 or 5,800 points at this stage. So that's like potentially worst case, but of course that would freak the market out if it even got anywhere close to that. That's about a 4.5% away move, and then down to the 56 is about a 7% move from where we are. And for the overall drawdown from the top could see you out at around 8.5%. So pretty decent size if it ever got there. Overall, things are looking relatively good. So quite strange that the market is fearful when it's so close to an all-time high. And the interesting ones now are around the globe with this 18-year cycle winner's curse phase. Australia hit a new all-time high today, up at 8,575 points. The top 50 in Europe, let me get the Europeans out, you are a fraction away from a new all-time high, which was set back in 2000, the year 2000. Let's get up there. It's about 2.5% away from a new all-time high. Yes, blame it on inflation or money printing or whatever you want to blame it on, as we always talk about day to day. The point is you have to put your money somewhere. Maybe you choose real estate, and maybe you choose the stock market. The stock market has been going up, therefore, at least you're not losing to inflation if it happens to be in the stock market. So your Euro Stocks 50 index being led by the UK at new all-time high prices. That's what it did yesterday, Thursday. Well, currently that's Wednesday, and then now we're at Thursday, so another new all-time high price here, continuing higher and higher. Obviously, they have a lot of financial stocks in their stock market. The DAX, Germany, biggest economy in Europe, new all-time high again yesterday and the day before. Almost the day before that, new all-time highs, daily close. Day before that, new all-time high, new all-time high. You're starting to get the picture again if you have been following for a while or if you're just new here. The point I'm going through all of these charts and all of the markets around the globe, is to show that you're in the winner's curse phase. It's happening right now. Prices are going up. This is leading to, I think this will eventually lead to more inflation, which is what I'm showing with the CPI info. Even if Trump's able to get it down for a bit, even if he's able to get the interest rates in the US dropped a little bit towards the absolute peak, I suspect that the interest rates will have to go up again because of the inflation that is happening. We're seeing a lot of prices go up. And I've also got the commodities to get through as well, which have also hit a new fresh high. At least the Bloomberg index has hit a new fresh multi-year high. Commodities up means things are getting more expensive. Therefore, isn't that inflation? Things are getting more expensive. Could just be supply and demand. Okay, so France also had a new fresh high. It's going back to June of 2024 and now just 2.7% away from a new all-time high. For our Dutch viewers, I know there's quite a few of you watching, you're nearly at a new all-time high for your stock market as well. Who else have we got here? Anyone from Italy? New fresh highs. These are multi-year highs. I mean, you only need to say it once, right? But it's a long time. It's hitting fresh highs after breaking through the diagonal downtrend that was set from 2007 and the other peak at 2000. It had a little bit of a pause here early last year, and now the Italian stock market's also headed higher. Why does all this matter to Bitcoin and cryptos? I'm presenting the question here, people often ask that, is that if we're not seeing the rest of the markets go up, more importantly the US, Europe doesn't necessarily matter so much. As long as the US is going up, we're probably going to see high prices for Bitcoin and cryptos. But I think it's interesting that even the rest of the world is going up in this period, which I've talked about many times, the winner's curse phase. Generally, this is just for the US real estate and economy, but it's interesting towards the end of the cycle, which we're running up to now into this peak, we're also seeing the rest of the world's stock markets. Therefore, I suspect investors are assuming the economies are going to do relatively well if they're forward looking out sort of 6 to 12 months, that they're also going to be doing relatively well in that period as well. The people who keep getting the market wrong are the AA investors, so I'm going to keep watching what they do because they keep screwing this up. 43% are bearish as of last week, and that was not the greatest time to be bearish, as the charts have shown. So somewhere around, in this period, they were bearish after this dump, and the market's been higher now. They're also max bearish at the low and max bullish at the high. So let's keep following this to see where they decide to position themselves, usually on the wrong side of the market. So that's a great, at least in my opinion, great piece of data here to keep following. And this is quite similar to the COT data that I'll get to for BTC. I'm going to have a look at the multi-year breakout in commodities. Over the last 10 sessions, spot commodity index closed at a multi-year high on 3 occasions. Similar breakouts suggest the rally in a broad basket of commodities could persist over the next year. So essentially, the energy sector displays the best consistency 12 months later, rallying 92% of the time. I said earlier, I think commodities are going up. I think we're going to get more inflation, and that will then have to lead to interest rates going up. But this is not for another 12 or so months. So I think we still have time with Bitcoin and cryptos to go up. Because this video has gone on long, I'll leave this for another time and just show you the results and the summary here. Just because commodities have rallied to a multi-year high, marking their first significant breakout following a 2-year low, historically, similar breakouts have led to sustained rallies over the following year. So that's what the data says over the last 100 or so years. I think it was about 80 to 90 years with the rest of this data here. 80 to 90 years that shows the commodity prices will continue higher. But there's no issue with the commodity prices and the stock prices. Among sectors, energy demonstrated the highest win rate over the next year. So this does not affect the stock market over this shorter period of time. So what's in that basket of commodities? Well, we've got the energies, you've got grains, industrials, metals. Obviously, gold has been hitting new fresh highs. Softs being sugars, coffee, cotton. Coffee has been even better performing than Bitcoin, and then livestock, cattle, and pigs over here. So lots to get through in that if you wanted to understand how it all is calculated. But this index has been hitting new all-time highs. As I just showed with this particular article, it's probably going to go on higher, and it's not a negative impact to equities, to stocks. Therefore, it seems like stocks will also go up. Therefore, I think we've still got further to go with Bitcoin longer term. But in the short term, which is basically what 95% of people look at on YouTube, you see it so often, If the market went up, people only look for search terms with pumps or something to do with prices going up. And if the market goes down, this is in the 24-hour period or even the 12-hour period, they only look for titles of the market going down. Okay, so in the short term, even if there is a little bit of a pump here, a bull trap, to any of these prices, I suspect we still have to see further downside here. Why? Well, let's just get to the damn COT data. Let's have a look here. This is the COT report. I'm just going to move my face out of the way so we can see what the chart shows. And this lines up very, very well with each of the pumps, pauses, dumps perhaps on a bigger scale going back into 2023 and 2024. But the main thing you want to look for here is the red beginning to load up on the side of the line. So here's your straight line through the middle that you want to see the market go in. If it's loading up on the upper side, well then the commercials, which is the red, they suspect that the market is going to go higher. If there's loading up on the southern side of the line here, so the underneath the line, they suspect the market is potentially going to go lower. The blues often get it wrong. They are your large speculators, and the yellows are the small speculators. So sometimes the yellows are on the right side, sometimes they're on the wrong side. They seem to be doing all right. They're on the right side of the commercials right here, but they're basically riding this thing all the way down as well through 2024. Now, one thing that hasn't happened yet, now there's a little bit more to it as well, and this is from Crowded Market Report, Jason Shapiro, absolutely fantastic trader. The other thing that hasn't happened here is that you haven't seen an absolute crowding one way or another. And then on top of that, which is proprietary to Jason Shapiro at Crowded Market Report, is the signal as to when this thing explodes to the upside or explodes to the downside. The only thing that he tends to share is the crowdedness. And then what I layer on top of this, let's bring my head out again here, is my overbalance in time and price. Well, I mean, I use overbalance in time and price the most. So let's just take a look at that here. We haven't seen any overbalance in time and price yet to the upside. We saw that right here, going back to 2024, September, when we got the breakout. So let's find this chart again. Here it is. This is the overbalance in time and price right here. That was in September, right? You can see the loading up for the commercials getting much, much longer. And the unfortunate large speculators on the wrong side of the market again, they're getting very, very short, almost dead on when we had our overbalance in time and price. So that signal from the low in August to that top in September, that signal told us, and we said it to you on the channel. If you were watching, let me know. Hit that like button down below. Let's see if we can get over 3,000 likes. Hopefully there was at least 3,000 people watching and paying attention at that time, just back in September, August and September, 6 months ago, to take advantage of that move to the upside. Now, we haven't seen it yet. That's why I'm still talking about this potential bull trap where people are getting quite excited, as at least what I've seen over X over the last 24 hours with that move. And maybe we do see some further downside to wash it all out again. But the point here is this overbalance in time and price. You can see it getting loaded up right around this level as well into these higher lows. And then we started to push higher from there. So it still remained high on the COT report for the commercial traders, and then it started to move. And then this started to drop off, and you pretty much lose any, edge on the market at that stage, because it's pretty much, there's not much going on. You don't really know where it's going to go from this point, and there's no, as I said, there's no edge. And that's the way I feel when we get to these top points. There's not really, it doesn't seem like there's much reward left to the upside in that short to medium term, but there is probably more downside. So there's more risk in the game to the downside. And this COT report also shows that the commercials are basically just getting out of the market. They've made their money on the way up. They're getting out here, and then it's anyone's game. And really, over the last 3 months, it's been anyone's game because it hasn't gone anywhere. The price that we're currently set at as I film this video is 96, 97, and the first time we hit that was middle of November. So a week short of 3 months of the market doing this, right? Basically in this trading range. So what I'm looking for next is at least some sort of overbalance in time and price. But along with that, the biggest ones, I think, is the market sentiment resetting. We have seen the market sentiment head up before, and then After these 2 points, you got these 2 points here, head up and then fail again. So we had nice bottom here in May. We had another one in July. Look at that. Bit of time in fear, bit of a rounding bottom in fear. Doesn't it look pretty similar? And then it started to head up again, got into greed, and then washed everyone out in August, only to hold in fear for a lot longer, putting in higher lows, putting in the overbalance in price, putting in a larger commercials long position, and then moving up without everyone. I think we're probably in the midst of something like that. Now, when I talk about this, and I've mentioned it before on the channel, people often reference this whole range. They think, oh shit, we've got 8 months to go. I don't think that's the case. I think it's this quarter. I've talked about that before. I think it's probably within this quarter 1 that we see some sort of low pivot point. If we haven't already, if this isn't the pivot point here on the 3rd, then I think it's happening sometime in quarter 1, and then we start to actually move again after that point. So that's the fear and greed index. I think there's probably some sort of move to the upside now, which might be that little mini bull trap, get a bit of a washout again, hold, and then start to move our way higher over the coming couple of months, probably into quarter 2. That's the way it's shaping up at the moment. The average true range is also dropping off here. So that's the range of the bars, basically lack of interest. And when that lack of interest drops off, that means, well, there's less investors here and there's less people playing the markets. And that's also showing up on the liquidations. You're seeing a lot less people getting liquidated, meaning there's a lot less money in the markets. You need to see all of this stuff pick up. For one, like Michael points out on his channel, Michael Pizzino, my brother, you guys probably know of him. If you do, let me know, hit the like button. And you see the pivot points happen on the markets at those high liquidations. When nothing is happening here, when you have this low liquidations, historically speaking now, then you're just basically getting a sideways chop. Daily exchange volume is dumping. Again, less interest in the market. I mean, it's 50 billion. I can't control this. For some reason, there are some weird people on the internet. I mean, for some reason, there's always weird people on the internet. They think that it's all fudding the market and that. Absolute morons. There's no way I can control this, trying to get more than $50 billion of exchange volume happening in the game to push this higher. We need to see exchange volume go higher in order for the rest of the markets to go higher. Makes sense, right? Or I hope it does. And at the moment, we're seeing lower highs, lower lows. We need to see that reverse like we did back in October as well. We actually saw it a little bit early here in September, which was right around the COT report. This one here, starting to see it load up, was also around the fear and greed, starting to move the opposite direction. It was also around the liquidation, not the liquidations, the Google trends. So we've got Bitcoin and crypto that also started to pick up, and at the moment it's still dropping off. It's not really going anywhere. This is the last 30 days, the last 12 months. It's basically been in a bit of a nosedive since November, lower highs, even though the price was making higher highs. So it's just still dropping off. The interest hasn't peaked up again. And yeah, as we looked at with the fear of greed, we still need to see this put in some higher lows and push higher with the price. Now, the last couple of things, let's reconnect here, is the USDT dominance. A quick update here. We're somewhere between 17% to the upside and 17% to the downside. What is that? That is my massive bull mania. If this is able to break down past 3.7%, so we're 17% away from that 3.7% line, that's going to be absolute mayhem. And on the way to that, you'll probably start to see it pick up. So we'll get some earlier signs before that point. If this goes up, forget about it. Your altcoins are going to be worth half of what they are now. They're going to be absolutely destroyed. I'm laughing about it because, I mean, look, I'm in the same boat. I have some altcoins, but over 95% of my portfolio is Bitcoin and ETH. I wouldn't necessarily be holding a ton of altcoins through this period until there is a clear direction to make that, I guess, that, degenerate gambler fast money from the altcoins, because this is just a bit of a grind. Now, everyone's welcome to have their own opinion. Maybe you want to do your DCAing on some of these alts. Do whatever the hell it is you want to do. I'm just presenting some charts. But what happens, and every single time, is if this goes up, your altcoins are going to get absolutely slaughtered. If this goes down, you're going to be absolutely rich as hell if you've picked the right altcoins. Now, generally at this point of the video, I go through some altcoins, but I will give a shout out to our channel sponsors, Bluffin and Bybit. You can get a crypto debit card and you've got up to $30,000 of bonuses using these links in the video description. Don't get scammed out there, just use official links in the video description, along with TIA Premium 7-day risk-free trial. The altcoins, ETH, BTC has given us a little bit of a blessing here, 3% in the last 24 hours, which has also pushed the USD price up, the ETH USD price up to about $2,700. Still, no confirmation here of anything substantial to the upside. Even the volumes are still lacking. You got a slightly higher volume here, but at the end of the day, you really need to see something more come into this. Some closes above 3,100 is really going to do it here. XRP, same sort of thing, still below the 50%, which is $2.60, and you want to get it back above some of the previous swing bottoms there at 265, 282, and then the previous top at 290. So a bit of work to do for several of these altcoins, which means we could still be looking at that bull trap into another higher low, another opportunity to be getting in at a better price. SUI doing a little better than the last two, holding above 50%, pushing higher, volume increasing on that particular bar. So you definitely need to see this follow through again. Otherwise, it's going to wear out a little here on this this last move. Still liking the look of it longer term. And Doge needs to pull above 28 cents, ideally above these few swing bottoms here, sitting around 31 cents. So that's going to be a pretty key level for Doge to get back above. Thanks again for your comments, likes, subscriptions, and shares if you want to help out the channel. I'm still in Bangkok and just posting about my gym experiences and the food experiences, and thank you for your recommendations for places and things to do in Bangkok. I think it's like my 5th, 6th, 7th time here, but there's always something new to see. I absolutely love the place, and yeah, hopefully I can do something over here one day in the future, crypto or whatever investment related. I'll see you guys back here at the next video really soon. As I said, like, subscribe, you know the deal. Until then, take care and peace out.